Yes, people, a very, very happy moment, all of you. So, guys, finally, we are beginning with the revision series. And today we are commencing with the first volume again. And in that, the very first chapter that we're going to deal with today is accounting for partnership firm, which talks about the fundamentals. So, all of you know that in India, if you want to do business, you need to have a particular form or a body. So, there are multiple forms or body in which you can operate the business. The first one being the sole proprietorship concern. Second one being partnership concern. Third one being LLP. Fourth one being companies. So on and so forth. About sole proprietorship concern, the accounting for that you have studied in depth in the 11th standard. But there are certain things or certain limitations under the sole proprietorship concern. That's where people look up to forming the partnership concern. So the concept of the partnership in depth has been discussed with all of you in the 12th standard. Sole proprietorship concern, all of you know, it is a single person who has got the idea of starting the business. He's a single person who invests the money in the business. He's a single person who's working hard to manage the business, and he's the final one person to reap the entire profit. But this kind of model, after a point or beyond a point, it is not scalable. Therefore, it is important for a person to have the next level growth, which comes in form of partnership. So in sole proprietorship concern, there is certain inherent limitation. To overcome that, the partnership business is being constructed upon. The first one being, in the sole proprietorship concern, there is only one owner possible. So if you have a business idea and two people want to come as owner, so you cannot function under sole proprietorship concern. So therefore, you have to form a partnership. The second limitation of the sole proprietorship concern is that single person is the owner. Any person will have the limited capital capacity. He cannot have hundreds of crores at any point of time. So you'll have the capital constraint. So in partnership, when you take one or two more people along with you, the additional capital flow will become smooth and easy. The third constraint could be the management constraint. One person managing one particular place, okay. But when you have the intention to manage multiple places across the country, then it becomes challenging. You might say, sir, what is the challenge? We can keep the staff and do it. Please understand the ownership and the accountability which the staff will work will be very different with the accountability and the ownership what the owner himself has. So at appropriate places, employee will play your, what do you call it? They will step in and they'll handhold you, but not every places. There are certain places where the owner has to step in. So these are the few examples I'm giving you for the constraint that the sole owner might face. So that is why they look up to form the partnership. So what is partnership? It has been defined by Indian Partnership Act 1932. What is Indian Partnership Act? So this is a rule book. This is a rule book that everyone has to refer if you are a partnership concern. So in that, the law has been prescribed, the rules and regulations has been prescribed in depth. So section 4 says the definition. Partnership is the relation, not relationship, is the relation between person who have agreed to share the profits of a business carried on by all or any of them acting for all. One important point to be noted here is you might get a direct question for 1 mark or 2 mark saying that define partnership or define something. When it is defined, you cannot change a single letter here and there of this particular definition. On the other hand, if they ask you what is the meaning of partnership, you are free to grammatically form the own sentence in your own language. But when it is definition, you cannot make any grammatical alteration at all. You have to write as it is. So do we need to by heart this? I'm not saying all the definition you have to by heart, but there are a few important definitions which I'll tell you, you have to remember. You might get a question for 1 mark or 2 mark and ask, define partnership as per the Indian Partnership Act. Define this, define that. So hardly there are 4 or 5 things that I'll ask you to keep in your mind that you have to by heart. So partnership, guys, is a relation between persons. It's not person, it is persons. Means what? 2 or more people means person. Those person have agreed to come together to do a business and share profit out of that business. And who will carry on the business? All the partners put together can carry, or any one person on behalf of everyone can carry. So I'll be discussing about this in depth in some time. Definition, yes, 100% have to by heart. Define means you have to by heart. You cannot alter a single letter. The person who have entered into partnership with one another individually are called as partners. We cannot call them owner. No, for a sole proprietorship concern, the person who is running the business will call them as owner. But here, technically, law says we'll call them as partners. Each one will be called as partner. And collectively, all the individual partners will be called as firm. They'll be referred to here as firm. You will not call them as company. You will not say partnership company. You'll say partnership firm. Who is given this meaning? This has been given by the law. The name under which the business is carried on is called as firm name. So there are so many individuals. All individuals have their own name, so that the identification becomes easy. Same way, there are so many partnership firms. So unless and until you give a specific name to it, how will I identify which business we are referring to? So the business has to be allocated a name, and that is called as firm name. Basic things, nothing complicated. Okay. Nature of partnership. Partnership from legal viewpoint is not a separate legal entity. Please understand, there's something called a separate legal entity and the business entity concept that we studied in 11th standard. Separate legal entity concept or the business entity concept or the accounting entity concept said that business and owner are two different perspectives. Always you need to account from the business point of view, not from the owner point of view. Who said this perspective? Accounting said that perspective. But law says that for me, you and owner, that is owner and the business are not different. If owner is doing something wrong under the name of business, I will catch hold of the owner only. So accounting says that both are different. Account from the business point of view, not from the owner point of view. But law says that no, you are not different from me. You're not different for me. From the firm, you're not different. For me, firm and the owner are same. So if something wrong happens in the firm, it has been done by you. You are the representative party. So you will be catch hold of it. The moment this statement is said by the law, this becomes a risky concern, which means this particular concern becomes the organization with the unlimited liability. Unlimited liability. So if somebody asks you, what is the liability status of the partnership concern? The liability status of the partnership concern is unlimited. And all the partners are jointly and severally liable. All the partners are jointly and severally liable. If they get you a question for 2 marks, what is the liability status of a partnership concern? These are the 2 keywords you have to mention, failing which you will lose marks. One is the liability of the partnership is unlimited, and second is all the partners are jointly and severally liable. So how the partnership firm got the status of unlimited liability and jointly severally liable? Because of the legal viewpoint, where the legal viewpoint says that no, for me, the partners and the firms are same. Which means what? If the asset of the firm is not sufficient to pay the liability of the firm, then those liability holders, those unsatisfied liability holders will recover their money from the private property of the owners, private property of the partners. I'll be discussing about this in depth when I do dissolution, because in dissolution, this concept is discussed in depth. And here I'm just trying to give you an overview. Capital 5 lakh, liability, bank loan 15 lakh, assets 20 lakh. Balance sheet is perfectly tallying. Guys, you feel that your asset is worth 20 lakh. But sometimes in reality, when you go and sell this in market, you might sell it at exactly 20 lakhs. You might sell about 20 lakhs or you might sell below 20 lakhs. The problem comes when you sell it below 20 lakhs. Let's suppose this is fetched you only 5 lakh rupees. When you went in market and you wanted to sell this earth 20 lakh worth of assets, it fetched you only 5 lakh rupees. Or in other words, let's say it is fetched only 10 lakh rupees. People took advantage of your position. People knew that you are in urgency. So they tried to suppress you. So 10 lakh rupees you got encashed. So you sold all the assets and all the assets got converted to money, 10 lakh. Now you have to pay to the bank loan alone 15 lakh rupees. But you have only 10 lakh rupees. 15 lakh is the bank loan people. Full 10 lakh rupees if you pay to the bank loan, still 5 lakh is left to be paid. Now, if you are a partnership concern, means you are having a unlimited liability clause automatically by law. In that case, the banker, to recover the remaining 5 lakh rupees, they will attack the personal assets of the owner. Now, in the dissolution topic, I'll be discussing in depth that how they can attack the personal assets. And if there's a personal loan, How that personal loan should be dealt with, I'll be discussing in depth in the dissolution topic. So here I'll keep it very simple, that the liability of the partnership is unlimited and all the partners are jointly and severally liable, which means what? If the assets of the firm are not sufficient to pay the liability holders, the unsatisfied liability holders will attack the private assets of the owner to recover or quench their thirst. They'll try to recover from the personal assets. That much only you have to remember. So partnership from legal point of view is not a separate legal entity from its partner, since the firm's debt are payable from the personal assets of the partners. And if the firm is unable to repay in case the firm is unable to repay the liabilities, that is what has been mentioned here. Same thing what we discussed. However, partnership is a separate entity from the accounting viewpoint. Accounting viewpoint says what? Separate entity. But legal point of view, both are one. Online, somebody called me.
So we can't use the capital in the business to pay back outside debt, right?
Capital in the business is what has been here, no? Capital 5 lakh, it is in form of what? Assets only, no? That is what you have sold at 10 lakh rupees.
Okay.
Capital 5 lakh doesn't mean that you have extra 5 lakh with you. See, liability side of balance sheet means what? It is a source from where the money came in. If somebody asks you this 20 lakh rupees from where it came, so you will tell, sir, 5 lakh came from capital, 15 lakh came from the bank loan. That's why in 11th standard we discussed the liability is always the source of assets. And assets is what? Assets is basically an application of this money where it came from, where and all it has been applied. How much has gone towards building land? How much has gone to plant machinery? How much has gone for stock? How much money is there in cash? How much you have deposited in bank? So all these are sources and applications. Am I clear? Have I answered your query?
Yes, sir.
Now, essential feature or the characteristics of partnership. Two probability from here. One, from this, you might get a direct question. Let's say 2-mark question. Write the essential features or the characteristics of partnership. You should be in position to write. There are totally 5 points. So if they ask it for 2 mark, you'll write 4 points. Or they will not ask a direct question from this. From this, they'll try to frame any MCQ question and ask. So theory is equally important. Theory is equally important. Last year, students those who got 99, 98, in that few of them missed out because of theory. I'm telling you, 1 mark you lose and you don't get centum, then you'll have that pinch for the rest of your life. You get 99 and you miss 1 mark to get the centum. I'm telling you, it'll pinch for rest of your life. Theory is equally important. People undermine the importance of theory. When it comes to theory, please remember the entire TS Rival book you need to have in your fingertips. All the book back MCQ questions has to be in your fingertips. Plus, one mistake what people do is they don't go through NCERT. For practical questions, I leave it up to you. But when it comes to theory, the entire theory of your NCERT should be in your mind. All the book back questions, within the book questions, you have to go through. Are you able to follow? So last year, one student got 98. 1 mark she left because I have the answer script. We have the answer script. In the upcoming class, I'll show her answer script also. She got 98. 1 mark she lost in company accounts question. She made one small mistake there. And 1 mark she lost in theory. So 2 marks she is fallen short of centum. So please be very careful. You come so far and you just miss out for 2 marks or 1 mark. No, it will pinch you and hurt you very badly. On the other hand, if you get 95 or 90, no, still not pinch you that much. But you come to 97, 98 and 99, if you don't get centum, no, still pinch you very bad. I'm telling you. You guys have not experienced the 97, 98, 99 so far, no? So you don't have that feeling. The day when you get and you're very close to that marks, no, you'll understand. And please remember, a student who is getting constantly, let's say out of 100, 70s, 80s, it's not necessary that in board exam you should get only that marks. There are so many people who got 95 plus last year have been constantly scoring 70s, 80s out of 100. But at the end, this last 2 months, 3 months, they got completely under their control. And they are the shining stars in that standing. So I'm telling you, if you have a positive and self-belief, game can change from now. Game can change in your favor. So whatever happened so far is fine. But from here, if 2-3 months, if you work hard and bounce back, I'm telling you 95 plus, you will get it and you can get it. Now, the essential characteristic of partnership, that in partnership, 2 or more person should be there. If only 1 person is there, then that's not partnership. No, that is sole proprietorship concern. So it is very important that in partnership at any point of time, 2 people or more than that should be there. 2 is like minimum. there must be at least 2% to form the partnership. And all such persons should be competent to contract. Competent to contract means what? Law should say that, okay, these people are eligible for entering into contract. So you may ask a question, sir, will law say anybody is ineligible? Yes. The Indian Contract Act 1872 has given two people or two type of person who are not eligible to enter into any contract. The first is a person of unsound mind. Unsound mind means what? Lunatic, mentally retarded. Don't say mental and come in the examination. A mental person cannot write contract. You have to be professional, no? So a person of unsound mind who's not in a capacity to make any decisions. Now, a person, let's suppose you identify from Agra's mental hospital. Can you make him as partner? Possible? Possible. But what will you benefit? So a person of unsound mind is incompetent to contract. So he cannot enter into any contract. Therefore, he cannot be admitted as a partner. Second, any person disqualified by law is a person called as Mr. X, big smuggler. Court has declared that he's a smuggler. He's wanted in all the police station. His post is there. But this person has got Bhayangara Duddu, huge investor. You know that this guy has got full money. Now you are in need of funds. You tell Mr. X, please come and be my partner. If you take him as a partner, no, gone. That person is incompetent to contract. He is disqualified by law. Any murderer, for example, anybody who's disqualified by law, just because he's having sufficient money or not sufficient money, more than sufficient money, don't make him as partner. These two people are incompetent to contract. Rest all fine. Maximum number of partners. Guys, maximum number of partners was not laid down in the Indian Partnership Act 1932. The point was missed out. But later, they wanted to tap the upper ceiling limit. So, in Companies Act 2013, that is in section 464, they incorporated a point telling that the central government is being given authority to prescribe the maximum number of partners. But that should not be beyond 100 in numbers. So in the Partnership Act, minimum requirement is 2. Maximum requirement is not given. But it was important to tap the upper ceiling limit. So they felt that Indian Partnership Act 1930 is very old law. One point what I will go and alter. So instead of altering that or bringing amendment in that particular law, what they did is they gave a corresponding reference in the Companies Act 2013. See, Act is a law. And law, everybody in the country has to follow. Even if it is a central government. Who is the central government now? BJP. So even they have to follow the law. They are not above the law. So now, law says that. How is law created? Law is created by a bill passed in 2 houses. One is Lok Sabha, another is Rajya Sabha. So there is a bill. In that bill, the entire act has been sent to them. Everyone will read that. We are assuming. Then they will give a support voting for that in favor of it. And if you get a majority vote, the bill is passed. Once the bill is passed, it goes to president for assent. Once the president gives the assent signature on it, the law is formed. Once the law is formed, all the parties, everybody comes below it. So now the law, Companies Act 2013 has given the empowerment to whom? Central government. That central government, now you decide what is the upper ceiling limit for the partnership concern. But the maximum ceiling for you that I'm setting is 100, which means what? From 2 to 100, anyhow the upper ceiling limit central government can change. Currently, the central government is prescribed, the upper ceiling limit is 50. So 100 is the maximum power that is being given to central government. In that, central government said that we are proposing the maximum limit is 50 for a partnership concern. So tomorrow, if they want to change, that is central government, they can make it 51. They can make it 60, 70, 80, 95, 98, 99, 100. But they cannot make 101. Because for central government, law has permitted the upper ceiling limit. That is their limit. Beyond 100, central government doesn't have the authority to extend it. So the upper ceiling limit that is given to central government is only 100. In that, the central government currently has proposed the upper ceiling limit as 50 for us. So law said central government 100 maximum limit. Central government said to us 50 is the maximum limit. So if somebody asked you in the question, what is the maximum upper limit a partner can form in the partnership concern, or how many partners you can have maximum in the partnership concern, is 50. It's only 50. How much is the maximum limit that central government is allowed to authorize? 100. So are you able to understand the difference between 50 and 100, online people?
Yes, sir.
Yes, sir.
Okay. So as a result, partnership firm cannot have more than 50 partners. Next, minor as a partner. A minor can be a partner in the firm, but only in profits. There's a point called as minor can be admitted in the partnership firm for the benefit of the partnership. If you feel that by admitting a minor as a partner, the overall business can succeed or it will be beneficial for the business, you can add him as a partner. But the minor will share only profits in the business. He will not share any loss. This minor is not saying, law is saying. So minor can be a part in the firm, but only in profits of the firm and not in loss. Please take a highlighter, highlight this point. First important point, very, very important point. Second, a minor partner on becoming major. When does somebody become major? 18. The moment they complete 18 years of age, the moment they attain 18 years of age, the minor becomes major. The moment you become major, you either have to accept being a partner in the firm or you should refuse from being a partner in a firm within 6 months of becoming 18. Within 6 months of completing 18, not becoming 18, completing 18. You're supposed to give a notice to the firm saying that, yes, I'm willing to continue. As a major, I'm willing to continue. Or as a major, I'm willing to quit this firm. You have to give an intimation. In case if you do not give this intimation within 6 months, then the partner will become, that is the minor partner who's converted to major, will become liable for all the actions since he has become a partner. So when he has become a partner, since minor has become a partner, no, from there all the liabilities he'll be equally applicable and responsible. Am I loud and clear? If a minor upon becoming a major does not decide within 6 months, then such minor to major converted partner becomes liable to all the action since he or she became partner. So when was she became partner? Since minor level, 13 years, 14 years, 15 years. From that level, retrospectively, the liability will come on the top of the head. Agreement. Now, the two important points which people needs to understand and differentiate. One is called as agreement. Second is called as registration. Both are different terms. Agreement means what? Sir, agreement means the terms and conditions that has been agreed between the partners. Okay, you share this much profit, I share this much profit. You bring so much capital, I bring so much capital. On this interest is so much, on this interest is so much. All the terms and conditions. You operate the bank, I will do this. So whatever terms and conditions between the partners, you're making an arrangement, that is called as agreement. Now this agreement can be either in oral or it can be in writing. Not anywhere else, never anywhere in the law is specified that the agreement has to be in writing. There's no compulsion. Law has given a free hand that you can have an agreement which can either be oral or writing, but you should have an agreement. You should have an agreement between the partners. It is advised to have the agreement in writing because once you say it oral, those days you didn't have a recording system. So once you said oral, there is a possibility that you might deviate from that. Nowadays, you have the recording system. So you can agree all the points in recording and keep as recording. So recording between the two parties of agreeing the terms and conditions is accepted. But having it written is much more advisable from legal point of view. So if you're facing any legal challenges, this is much handy. And if agreement is in writing, it is called as partnership deed. If agreement is in writing, it's called as partnership deed. So law says that agreement should be there. It is enforcing that agreement should be there, but it is not enforcing that it should be oral only or it should be writing only. That they are not enforcing. You're free to choose. This is about agreement. Then comes registration. What does registration means? The partnership deed that you've prepared, all the terms and conditions which has been signed by both the partners, it has to be registered with the government authorities, the local government authorities, by paying a stamp fee. By paying a stamp fee, small minute charges, this becomes a registered document. So tomorrow, when any legal battle the firm faces, the registered partnership deed will have a bit more advantage and weightage than just having an agreement. See, there is one thing. Agreement will always happen on the stamp paper. Generally, it happens on a stamp paper. You understand what is a stamp paper? Having the agreement on stamp paper is not registration. Agreement is on stamp paper. Registration means what? You are going to the government, local government office where the registration is done. You pay a nominal registration fee, stamp fee. You get their seal on it. That is called as registration procedure. That is not compulsory. It is optional in the partnership concern. So in the partnership concern, agreement is compulsory, but registration is not compulsory. It is optional. But in agreement, you can have it oral or writing. It is your choice. Now the question that arises is that why people do not register. 90% of the people, they don't register. One is to save that stamp fee. Second is the small legal harassment that they'll go through. To avoid it, they say, we'll do registration, they leave it. But later stage, they have a suffering. So it's very important. Please get a advice from the lawyer or a CA or a CS before you do the registration or before you get into partnership. Now, moving on.
Sir,
Yes, boss.
so can you show the
Whiteboard.
Yeah. Can you go up? What's TNC?
Terms and conditions.
Oh, so even if the partnership deed is created, it's okay if you don't register it.
Yeah, so if you have the agreement in writing, it's called partnership deed. In the stamp paper, you've done it. Even if you don't register it, it's fine. So
Okay.
registration is not compulsory. Having agreement is compulsory.
It's compulsory.
In that also having agreement in writing only, it should be there. They're not telling. It can be either oral or agreement. Sorry, oral or writing. Partnership comes into existence by agreement, either oral or written. It is basis of relationship among the partners, which may be for a particular venture. Now it is not. Now the question is, sir, the partnership firm what you're forming, it will be for how long? So certain partnership will be for a particular venture. I give an example here that if you're wanting to construct a 300 apartment, so we have all joined together and our goal is what? To construct the apartment, sell the apartment. Once the last unit has been sold, our business is accomplished. So we can close the business. So we call that this partnership is for a particular venture. So after that venture, the business will not continue. So in the agreement, if you're mentioning a point that this partnership deed is for a particular venture, and upon completing this venture, upon completing the final sale of the apartment, the business is closed. Like that, if you make a sentence, then the partnership firm will be dissolved. Point to be noted, partnership firm will be dissolved. Or it can be for a particular period. It can be for a particular period. You might say that the partnership firm, what we're starting today, is valid only for 5 years. If you mention that point in the agreement, you mention the date. On that date, the firm will dissolve. If you don't want to dissolve, then you have to cancel the old agreement and renew the new agreement with the extended date. If you don't extend it, if you don't renew it, automatically after the time period lapses, the firm becomes invalid. You have to dissolve it. If you're not sure that this business will run for what, how many number of years, for what period, you have no idea, then you can create partnership at will. Means what? We will run this business as long as we want, and whenever we don't want to run it, we will give a letter to all the partners and close the business at our own will. So you have to mention your point very clearly in the agreement. The written agreement among the partners is called as partnership deed. Third point is okay. Fourth point, profit sharing. The agreement between the partners should be to share the profit and losses. Obviously. Fifth one, very, very important. Important from the theory point of view. You might get a direct theory question or MCQ. Business can be carried on by all or any of them acting for all. There could be a question where they might ask you to explain the relationship between the partner and the business. Please understand the relationship between the partner and the business is that of a agent and the principal. Please make a note. The relation between the partner and the firm, or relation between the partners, is that of principal and agent. It is not employer-employee relationship. What is employer-employee relationship? There's an employee called as A. What is the relationship of this person with the business firm? It is the employer-employee relation. So the business is the employer. You understand what is employer? The person who gives the job is employer. The person who does the job is employee. So the relationship between the staff and the business is that of employer-employee. Now the relation between the partner and the firm is not that of employer and employee. It is that of a principal and agent. Sir, what does it mean? Let's suppose there are three partners, A, B, C. They three have formed a partnership concern. Now, all the three are working partners. All the three are working partners. Do you understand what is a working partner? All of them will work hard and smart to run the business. To run the business, all of them are working partners. And upon working, whatever the consequences of this hard work is there, the consequences all the three partners will bear. The consequences all the three partners are bearing. So in this case, I would call whom as agent. Sir, agent is a person who does work for the business, who runs around for the business. Can I say in this case, all the three are working equally hard? Or the working hard ratio could be different, but all of them are working. Some will work in a very fast pace. Some will work in a medium pace. Some will work in a slow pace, but all of them are working. So if any partner is working for the business, running around and working for the business, he is called as agent. So A, B, C, all the three are agent. And in the capacity of the agent, whatever hard work you do, and if that results into any consequences, that consequences who will bear? The principal will bear. So who is the principal here? All the three are principal. Means agent is a person who will go around and do the working. And whatever work is doing, the consequences who will bear? The principal will bear. So ultimate bearing is principal. Are you able to follow? So in this example, all the three are working partner. Means they are agent. And consequences all the three will bear. So all the three are principal. So what can I call this as? A business of partnership can be carried on by all. Business can be carried on by all. Business carried on by all means what? The hard work is done by all of them. This is one scenario. Or the business is carried on by any one of them who is acting on behalf of all the other partners. Now comes the second scenario. In the second scenario, A, B, C, three partners. In this, A is the working partner, B and C are sleeping partner. Both of them invested money. That's all left. Only beyond that, they are not doing any other work. So A is working partner. He's working continuously for the business day in and day out, day and night. Whereas other two partners are called as sleeping partners. They've invested the money and left. Now please tell me, guys, in this, who is agent? Who is agent? Sir, A is the agent. And whatever work he does, the consequences of that is on the principal. So who is the principal here? Who is the principal here? Two options I'll give you. A, B, C, all the three are principal, or I'll tell you B and C is only principal. Okay, online people, waiting for your responses, please.
All three.
Sir, all three. A, B, C. Because whatever A does, the repercussions of that will have on A himself along with B and C. So now A is the person who is working on behalf of A, B, and C, acting for all of them, on behalf of all of them. This is what it means. So as an agent, he represents the other party and thereby binds them. Them means what? Them means all the three persons, A, B, C, through his act. So whatever act agent is doing, the repercussions of that, the consequences of that is binding all the partners. As a principal is bound. As a principal is bound by the act of the partner. So whatever act the agent is doing, he's bound by it. Bound by it means what? Whatever the consequences happen out of that, the principal has to bear it. That's why the relationship between the partner and the business is that of principal and agent. The relation between partner, one partner to another partner, is that of principal and agent. So these 2 points you have to remember. Rights of a partner. I've discussed this in depth in the regular class. Right? So I'm not intending to again go through this point. So if you have any doubts in this, please go through and I'll give you 1 minute of time. Please go through and ask me the doubt. Right of a partner means what? The normal right which any partner will be having, which is given in the law. If you feel that no, sir, this rights we don't want, we want to customize our rights, then in the agreement you have to customize it. So if you customize it, you'll go as per the customized point. If you're not having any points in regarding to this, then this 5 points will be normally applicable. Now, please go through and tell me if you have any doubts in this point, 5 points. Sorry? 8 points. Where is 8th here? Okay. Please go through, guys. Total 8 points here. Please go through and tell me which point is bothering you. That is, these 8 points, what is given is, guys, if you don't agree anything contrary to this, then this point is applicable. In simple words, in the agreement, if let's say these 8 points are not mentioning anything about this these 8 points are not mentioning anything in the agreement, then this 8 points is given by law. So this law will be followed. For example, if I have to tell, a partner has right not to allow the admission of a new partner. This means what? Law says that if you want a new partner to admit, all the old partners have to agree for it. So this is a general law that has been given in the act. But you can customize this. You can put an agreement clause saying that, let's say there are 3 partners A, B, C. We're giving a sole right to C alone to decide upon whether a new partner is being admitted or not. So in the agreement, you've made a clause that C is the ultimate authority to decide the admission of the partner. Like that, you made a clause in the agreement. And at the end of the agreement, all the 3 partners, A, B, and C, have put their signature. In that case, if C is allowing a new partner to come in, A and B cannot go against it, because in the agreement, they have agreed that C has the whole right to decide the joining of a new partner. So if you agree anything specific in the agreement, you have to go with the specific point mentioned in the agreement, agreed by all the partners. But in case if these points are forgotten to be agreed upon or to be discussed, then these 8 points will apply. So in that case, what happens? A new partner is admitted only upon the consent of all the partners. If any one partner says that no, I will now not allow him to be taken as a new partner, then you cannot take him as a new partner. 8 point, one student asked it out. Sir, after giving notice, what is a notice? As a partner, you can give a notice to the rest of the firm, and you can express your unwillingness to continue as a partner. You might say that I want to quit. This can be for multiple reasons. Maybe you're not getting along with the partners, or maybe you've fallen sick at a young age, or you become old, you're not able to function appropriately. So you feel that I'm inefficient now, or I'm not getting along with the partners, so I don't want to affect the business. So it is better I step aside. So you give a notice telling that these are the reasons because of which I'm stepping down from my role as a partner, and I'll be quitting this firm. You are free to give the notice. After giving the notice, the partner has right to retire from the firm. But in the agreement, always it will be agreed that if any partner is giving a notice to retirement, he has to minimum serve for 2 months after notice, 3 months, 4 months, 5 months, 6 months, or even 1 year. This is called as notice period. This is also applicable for if you go out and work in a corporate world. If you're working in any corporate companies, if you want to quit that business, you have to give a notice, and you will have to serve a notice period. So I was in Deloitte as a qualified CA. So from Deloitte, I wanted to move to some other company. So I had to serve a 2 months of notice period. So I gave a notice, and after notice, 2 months I have to serve. Why? Because as a senior person, I was having a lot of responsibilities. So that I need to transit to some other person who's coming into my place. No? So I have to handhold all my works so the transition is smooth, so that the business is not affected. So as a normal employee itself, you are having 2 months notice period. Then partner means he's handling a huge business and segment, boss. So we cannot say him next day you go, no. So he has to serve a notice period of 2, 3 months, 4 months, 6 months, whatever is agreed in the agreement. And from there, he has to handhold everything, and then he can get relief from the firm after the notice period is served. But once the notice period is served, he has right to retire from the firm. The partners cannot hold him back. They cannot compel him to hold him back. This is what the point number 8 is trying to say. Kaushik, okay? 6 point, a partner has right to take the decision in the interest of the business. Yes. No, normally they're telling that in the agreement, nothing specific you have agreed upon. So all the partners has right to take some decision in the interest of the business. So sometimes what happens, see, let's suppose I'm going to sign a contract with some XYZ big company. So in that, all the three has to agree. But sometimes what happens is that there's an emergency situation where the remaining two partners are not reachable. But I have to make some important decisions or agreement. If I don't make it, it will affect the business. So keeping interest of the business in mind, I'm not asking the remaining two people because they're not reachable. And I'm making a decision. So the remaining two partners cannot come and question, how dare you take the decision without us? He cannot question. So he will have his point telling that, boss, we tried to reach you, but you were not reachable. And I had to make this important decision because it was in the interest of the business. So this line of law will come into your protection. The protection of the person who has made the decision for the benefit of the organization. During emergencies or any, it's not only emergencies, it is for the interest of the business. It's not only emergency situation, it could be any situation. Even a normal situation, you might have to take some important decision which will either build the business or put it down. So it's not only emergency, it is even normal situation also. Yes.
Another person is not competent to contract, minors. If minors are not competent to contract, how can they be contract?
That's what this point was. Okay, now Nishi is asking a question that in some other book, point number C is minor. Minor is competent to contract is what they're putting. Actually, this was there even in the TS Rival book, but later they removed it. So minor 100% is not competent to contract by himself. He'll have a guardian who will be doing all the transactions or signing the contracts on behalf of them. That's why in TS Rival book, they've removed this point specifically here. Okay, so we have to go with this. If this is clear, I'll go to next part. So like that, there are common general rights that is being given, guys. If contrary to this, something is not agreed upon. So these are the general points which is applicable. I've discussed in depth in the regular class. So I don't want to waste my time again here because you have a lot of things to focus. Similarly, partnership deed, guys. We have discussed all this content in detail in the regular class. I don't find any sense in discussing full thing again. But this topic is quite important. You might get a question for 2 marks or 3 marks or 4 marks. They'll ask you, please write down the contents of partnership deed. Any 4 content, any 6 content, or any 8 content, or any 12 content of partnership deed. And there is one particular examination here where the question they've asked, a direct question on partnership deed ka content. So if somebody asks you what is the content or clause or content, please make a note. Clauses, content, both mean same. They'll ask you a direct question. Please write the clauses of the any 12 clauses of the partnership deed or any 12 contents of the partnership deed. So from these, any 12 points, whichever you feel easy, remember. 12 is on the higher side. 12 to 15 you can remember. Rest you can leave it. Because highest question that I can ask, that they can ask is for 6 marks. Right? So let's suppose each content is for half mark. So 12 points maximum if you remember, more than sufficient. For extra, remember 3. For safer side, extra, remember 3 points more. 15 points you have to remember. So please mark this important from theory perspective. From theory perspective, this is important. So let's slip in for a quick break of 8 minutes. We'll come back and continue with the next point. Thank you. Yes, people, welcome back to the break. So let's continue. So next important segment, guys. The provision that has been given in the Indian Partnership Act in the absence of partnership deed. In other words, if the partnership deed is absent or partnership deed is there, but point with regard to these 6 have not been agreed upon, in that case, the law has given you certain things to follow. First one is, leave this first point, I'll come to this. Sharing profit and losses. In other words, the partnership deed is absent or partnership deed is there, but in the deed, you forgot to agree the profit sharing ratio. In that case, the profit sharing ratio will be equal. Second point, in the absence of partnership deed itself you have not written, or partnership deed is there, but you have forgotten to agree upon the percentage of interest on capital. In that case, interest on capital percentage not allowed. No interest on capital will be paid by whom to whom? Firm to partner. This is partner A. This is firm. Who gives capital? A gives capital to the firm. And in return, the firm has to pay interest on capital. In return, the firm has to pay interest on capital. So from the business point of view, firm's point of view, interest on capital is a expenditure. Now, why interest on capital is given by the firm to A? Normally, the understanding of that I'll discuss when I do the concept of interest on capital. Now, just remember, in the absence of partnership deed, or partnership deed is there, but the percentage of interest on capital, how much should be paid by the firm to partner, that point is not specifically noted down. No interest on capital will be paid to the partner by the firm. Next point, interest on drawing. Partnership deed itself is absent, or partnership deed is there, but in the agreement you forgot to agree upon the percentage of interest on drawing. In that case, interest on drawing is not charged. Interest on drawing is not allowed. Am I clear? So about interest on capital and interest on drawing in detail, I will do when I come to this independent concept. Fifth is remuneration to the partners. Means what? Salary, commission, bonus, whatever you say. For the hard work that they're doing, no, for that they're paying, it is called as remuneration. So sometimes you might get the term salary, bonus, commission. Sometimes they'll commonly give a category called as remuneration. If any partner wants to get the remuneration in terms of salary, commission, bonus, the details of that has to be explicitly agreed in the partnership deed. Now, in case partnership deed is not there, absent, or partnership deed is there, in that they have forgotten to capture the information about the remuneration, how much monthly salary, how much percentage of commission, how much yearly bonus, if this is not agreed upon, then it is not being paid to the partners. So if a partner wants the salary, commission and bonus in form of remuneration from the firm, you need to specifically agree the monetary value in the partnership deed, failing which you will not get any of them. Sixth point is admission of a partner. If a new partner wants to be admitted, all the partner needs to be giving an affirmation to it. If anyone is objecting to it, you cannot enter that person as a new partner. So new partner cannot be admitted unless all the partners agree, Now, I told you there could be a contrary point. In the agreement, you have agreed that we're giving C the full empowerment, or he is the sole or whole to decide about the admission. Then upon C's agreement or disagreement, a partner can join, a partner cannot join. So that is a specific clause. But I'm telling you, if the partnership deed itself is not there, and regarding the admission, you have not clarified anything in the agreement, in that case, all the partners' consent is must. Every partner has to agree for it. If any one partner object the admission of a new partner, then you cannot admit it. So these are the points. One more important point, the first point. Interest on advances loaned by the partner. Advances by a partner or loaned by a partner. Partner A, and this is firm. Guys, this is a concept where we're discussing about loan by partner to the firm, or this is called as advance by partner. Loans and advance by the partner to the firm. So in both the ways, Bhumi, can I say this is the loan for the firm? So we're talking about the firm who has taken the loan from the partner. Now the point is, the firm has to pay the interest on loan. What percentage? If the partnership deed is absent, partnership deed is not there, or partnership deed is there, but in the agreement they forgot to mention about interest on loan by partner, or they forgot to agree upon the percentage. In that case, law says that like interest on capital and drawing, percentage 0, like that will not assume. Here the percentage which law is prescribing is 6%. So interest on loan by partner is given as 6%. Interest on loan by partner is a charge against profit. What is charge against profit? You have to give that interest to the partner, irrespective of whether the firm is into profit or the firm is into loss. Upon paying the interest, whether the firm is being converted to profit into loss, you will not be bothered. You have to record. That means you have to record. You have to pay means you have to pay. So all the items that you record in trading account, all the items that you record in P&L account, by default, it is a charge against profit item. It is a charge against profit item. So interest on loan by partner is a charge against profit item. It means the interest is paid whether the firm earns profit or incurs loss. Please understand the 6% per annum is only for a loan by partner. So sometimes it so happens that the firm gives the loan to the partner. So this is loan by firm, and interest has to be paid by partner to the firm. So here, this point is not being covered. Still, it means that the interest percentage will be 0, which means in the absence of partnership deed, or partnership deed is there, but interest on loan by firm is not agreed upon, or the percentage is not agreed upon, in such case, it will be 0% only. It will be 0% only. Please make a specific note. Point number 7, interest on loan by firm. Please make a 7th point. Interest on loan by firm. No interest on loan by firm, or in other words, 0%. So 6% is only for loan by partner. So interest on loan by partner, 6% is given. Please be very, very careful. So loan by partner means for firm it is loan. For firm it is loan. For that only 6%. Now, who is giving loan to whom? Next point. Firm is giving loan to A. So for firm it is asset, and this is liability. So from firm's point of view, it is a liability loan. For that interest 6% given by law. But if firm gives the loan to partner, so it is asset. So on this, if partnership deed is silent or not, nothing agreed upon, it is always 0%. Now tell me if you have any difficulty in noting down or remembering these 7 points.
No, sir.
Interest on loan by firm will be recorded in P&L or P&L appropriation.
That will come. I'll wait. I'll tell. Don't worry. Next point. Next 5 points, very, very important. If all the partners agree, minor may be admitted to the benefit of the partnership firm. So minor can be admitted for the benefit of the partnership is what we discussed. But for that, all the partner needs to agree. All the partner needs to agree. So who is given this? Law is given this. Law says that a minor can be admitted for the benefit of partnership. Sir, where in law it is given? Section 30 of Indian Partnership Act 1932 it is being given. The word is may. The minor may be admitted. They have not used the word shall. In law, may means optional. May means optional. Shall means compulsory. Who has given this understanding? Not Prathik sir. No, Prathik sir. There are general interpretation rules. How do you interpret certain terms in the law? So in that, they have given this. Yes, Surya. No doubt. ऐसे किया ना doubt. Okay. Next, second point. A partner may be admitted as a partner either with consent of all the existing partner. So section 31 says that a new person is admitted as a partner only with the consent of all the partners or in accordance with the agreement among the partners. I gave a point, no? You're giving the complete empowerment to C. See, you can decide who will join and who will not join. So this is a specific point agreed in the agreement. So if nothing is agreed upon, for a person to join, admit, all of them have to agree. Or in the agreement, if you have given power to somebody that you decide who will come in or go out, then he will decide. So this is being given under which section? Section 31. Sir, do we need to remember sections? Not required. Third, a partner may retire from the firm either with the consent of all the partners or as per the point that you have agreed in the agreement. Give a notice period and retire. See, consent, they are telling, actually the consent is not required. Every partner's consent is not required. You give a notice, serve the notice period, you can move off. Nobody can hold you back. So this is given in section 32. Fourth one, registration of the firm under Partnership Act is optional, not compulsory. This is what I try to explain here. Agreement is compulsory. Registration is not compulsory. Agreement is compulsory, but in that, either oral or in writing. They have not compelled that it has to be only in writing. But agreement is compulsory. Registration is not compulsory. Who is telling that? Law is saying. Section 69 says that registration is not compulsory. Very, very important from the MCQ point of view. Last point. Unless otherwise agreed by the partner in the partnership deed, a firm is dissolved on the death of a partner. Now listen to me very carefully. In the partnership deed, you have not mentioned anything about the death of a partner. Upon death of a partner, what will happen to the firm you have not agreed upon? So the law says that a firm is dissolved upon the death of a partner. ABC, 3 partners. C died. You have to dissolve the business. If you don't want to dissolve the business, if you want that let A and B continue, in that case, what you should have done? You should have agreed in the partnership deed. If you have agreed otherwise in the partnership deed, then you'll go with that terms and conditions. If nothing is agreed upon in the partnership deed, then upon the death of a partner, the firm will be dissolved. Very, 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 very important point. Guys, very, very important point. Please take a highlighter. Highlight all the 5 points. Very important from the MCQ point of view. Yes, boss. Sorry? Section is not applicable at your level. Not required. They'll not ask. Section is not compulsory at your level, people. Only the pointers are important. 2 important points which are left by the students. Liabilities of partners. First, if a partner carries on the business in competition with the firm, A, B, C, 3 partners, A, B, C are 3 partners running FFLA. FFLA's main objective is to provide coaching classes from 9 to 12. Now, in that one partner C, what he's done is he started his own sole proprietorship concern. And in that also is giving a same service what FFLA is giving. So can I say C's concern is giving a direct competition to our firm where he is also a partner, right? So this is the situation. Are you able to understand what I'm trying to discuss here in point 1, online people?
Yes, sir.
If a partner C carries on the business separately in competition with the firm, and that too without consent of the other partner. So A and B were never knowing that C is doing such a thing. In that case, C in his sole proprietorship concern or in whatever concern is operating, whatever profit he earns, that profit earned from such business shall be given to the firm. So if C is doing a competitive business in competition to our business, in whatever form, that profit, whatever he is making, has to be given to whom? The firm. However, loss incurred, if any, will not be borne by, that is, if loss is incurred in the firm that has been run by C, whatever loss is happening, that loss C alone will bear. But profit, if anything C is earning, he has to give that profit, entire profit to the firm where he is a partner. Very, very important point. People don't understand the importance of this. From MCQ point of view, very, very important. Point number 2. If a partner earns profit for himself from any transaction of the firm or from the use of firm's property or business connection. 3 points they have mentioned. A partner is profiting himself privately. He is himself being privately profitized by any transaction of the firm. So which means there's some transaction happening between firm and the third party. And because of that transaction, whole and sole one partner is benefiting. Or use of firm's property. So FFLA's property is there. In this property, without firm's knowledge, one partner is using and making money out of it. Or the business connection. So the firm has established certain contract with specific people. Using that contract, using those specific connection, the C partner is individually getting benefited. In such case, whatever the profit that is earned by the individual partner because of this, he has to pay the entire money to the firm. I'll give an example. The 3 partners ABC running a construction business. So you know, all of you, construction companies or construction business, they buy the raw materials for multiple people. So here C is responsible for procuring the raw materials. So normal procedure is how C will approach 3 people. In that 3 people or 5 people, whoever is giving the least quote, C has to give contract to that particular person. Let's suppose I want to buy cement. The firm wants to buy, this construction business wants to buy cement. So C, who is given the responsibility of purchase, he is taking care of the purchase department. What is he supposed to do? He is supposed to go with top 5 people, get their quote. In that, whichever is least quote, he has to enter contract with that person only. But what this fellow did, he did not follow that procedure. He did a tie-up with some XYZ company, said that, look, I will give you the order. I will ensure that my firm is doing a contract with you, but whatever goods you sell to the firm, on that you have to give me 2% commission. So this is not, are you not trying to backstab the firm? This is wrong. As a partner, you should work for the business, for the firm, not for your own benefit. So now let's suppose on this transaction, if 2% commission is earning, that 2% commission profit what he has made, he has to give it to the firm back. This is what this point is trying to explain. Very, very important. People miss out to read this while revising for the exam, but you don't do it. Please take a highlighter and highlight the heading. Liabilities of partners. Very, very important. I want all of you to quickly go through illustration 1 and illustration 2 and tell me if you have any doubts. So whatever we have studied, guys, theoretically, they are given a practical question on it. So please go through immediately now and tell me what is your understanding on this. Amit, Lalit, Charu are partners in a firm. They do not have the partnership deed. They do not have the partnership deed. No partnership deed means no interest on capital. No partnership deed means no salary. No partnership deed means interest on loan at the rate of 6%. Interest on loan by partner. Loan given by her partner, 6%. No partnership deed means no interest on drawing. Fifth point says that profit before these transactions 50. So from this 50,000 rupees is supposed to minus 6% interest on loan by partner. Then you'll get the final net profit. That net profit you'll transfer to P&L appropriation account. So you'll distribute in what ratio? Sir, 50,000 rupees is profit. From that, I'll minus the interest on loan by partner at the rate of 6%. The remaining profit, what you get, you have to distribute equally because there is absence of partnership deed. So profit will be distributed equally. And last point says that a new person wants to be introduced. Can be introduced only with the consent of all the partners because partnership deed is missing. So whatever points we discussed, all the points are covered here in form of a practical question. So 50,000 ka 6% is how much? 3,000. 50 minus 3,000 is 47,000. 47,000 will be distributed equally. Easy. Illustration 2, take it as homework and let me know if you have any doubts. Now, listen to me very carefully. All of you know how does the accounting process works? What is the accounting process? It starts with identifying a business financial transaction. What is a transaction? A transaction is an activity that happens between two people. In that one is business, another is third party. Sir, every transaction do we account? No. Sir, those transactions which has got the financial value attached to it, only those will be recorded. Sir, then is there any non-financial transaction? Yes. As a owner of the business, I'm hiring a staff and I'm executing a contract. So is it not a transaction between me and the staff? Yes. But upon signing the contract, upon appointing him as the employee, is there any financial value that we're exchanging? No. Only when he serves for 1 month, he'll get the salary. But upon contracting an employee in my business, is there any financial transaction? No. So that will not come into accounts. Third, the financial transaction should happen in the course of business. I go to movie theater, buy ticket, popcorn. Transaction between me and the company, me and the theater. Second, money is involved. But is it happening in the business? No, sir, it is happening in the personal life. So personal financial transaction is not involved. So it has to be a business financial transaction. So first of all, identify a business financial transaction. And then you need to measure in terms of money. Measure in terms of money means what? Common denominations. As a businessman, you will not deal only with Indian currencies. You will deal with multiple foreign currencies. You might export multiple countries. You might import from multiple countries. So you have to deal with foreign currencies. So now, India purchased 1000 kg of something, let's say at 100 rupees per kg. So purchase price is 1 lakh. And I'm buying 1000 kg again at $10. So can I say 10,000 rupees? Can I say my total purchase is 1,10,000 rupees? Sir, no, this is INR, this is US dollars. These are not in the common denomination. So you need to convert this into INR. So you should have a common money measurement concept. That's why in 11th we studied money measurement concept, money measurement principle. You need to have a common denomination. Next, once you identify a business financial transaction, measure in terms of money, you will record it through journal entries by following either the golden rule or the modern rule. By either following the golden rule and the modern rule. So you will record all the transaction as and when it takes place in the chronological order. The problem with the journal is that it does not facilitate the totaling. So therefore, for totaling purpose, all the journal entries are posted to ledger. So there you do the totaling of all the common accounts. From the ledger, we prepare trial balance to check what? Arithmetical accuracy, whether the trial balance is tallying or not tallying. If it is tallying, means you have followed double entry system. If it is not tallying, which means you have done some error there. So you have followed the single entry system is what it means. A trial balance, if it is not tallied, you cannot prepare the financial statement. You have to see the trial balance is tallying, and then after you have to prepare the financial statement. So from the trial balance, all the items which has got the flavor of income, gain, expense and losses will travel to your trading and P&L account, basically the nominal accounts. And all the other items which has got the flavor of asset, liability and capital will be traveled to or transferred to balance sheet. Trading and P&L account is prepared to find out the financial performance of the business. Performance is identified by profit and loss of the business. And balance sheet is prepared to know the financial position. These both put together is called as financial statement. Basically the report card of the business. It is the report card of the business. So this structure, what you've been seeing, is the accounting process of a sole proprietorship concern. Now for a partnership concern, everything will follow. But when you come to trading and P&L account, you will not stop with this. You will also prepare something called as and P&L appropriation account. So this is an add-on ledger that you're supposed to prepare. Rest all is the same. Rest all is the same. Now, what is charge against profit? It is an expense, hence deducted from revenue to determine the net profit and loss of the year. Which means what? Anything that you record in the trading and the P&L account is a charge against profit. Means you have to record them irrespective of whether the business into profit or loss. So it is debited to P&L account as well as trading account. Which means this will not be a part of your P&L appropriation account. It will come only in trading and P&L account. It is allowed before appropriation. Example, rent paid to partner, interest on loan, etc. I'll tell what this is. Before that. Guys, this is trading P&L appropriation account. So in trading account, all of you know what comes. So on credit side, sale, closing stock. So I'll get my total revenue. From that, I'll minus opening stock, net purchases, direct expenses to get the gross profit. So gross profit will come here, which will be transferred here. Gross loss will come here, which will be transferred here. Once the gross profit is being transferred, at the P&L level, you add the indirect income. So you get the total income. From that, you minus the indirect expenses to get the net profit. This is a normal procedure. But in P&L, that is in partnership concern, sorry. In the partnership concern, there's a small twist. There are three particular items, which is a transaction happening between the firm and the partner. I repeat one more time. This is firm and this is partner. Between them, there are certain transactions happening, which is having the flavor of income, expense, gain, loss. Basically, the nominal transaction. All of you understand what is nominal transaction? Debit all expense and losses, credit all income and gains. So now between these two people, there is a nominal transaction happening. So all the nominal transaction happening between these two people normally goes to your P&L appropriation account. What is P&L appropriation? I'll discuss. Except three things. Interest on loan by partner, interest on loan by firm, and rent by partner. These three transactions has got a nominal flavor in it. Despite having a nominal flavor in it, It will not go to appropriation account. It will go to your P&L account, because these both specifically are charge against profit item. Law said that interest on loan by partner and rent by partner is a charge against profit item. You have to pay them interest, you have to pay them rent, whether the business is into profit or into loss. Because why this concept is come into picture is that there are certain scenarios where the firm was into loss. Since the firm was into loss, let's say there are three partners, A, B, C. C was rich guy, and the firm was not in position to pay the heavy rentals and go outside. So what C did is, to help the firm grow, he had a small premises. So he gave that small premises at a very nominal rent. So C gave this premises to the firm. Now firm was into loss. So remaining two partners A and B came and told C that C, business is into loss, so I'll not pay you the rent. So C started argument telling that, how dare you? Once you were in difficulty, I helped you, and now you're not paying the rent. How it is fair? Had you taken this premises elsewhere outside, you'd have told that person that my business is into loss, please don't take rent. Will any third party agree? No. Then why are you doing this injustice to me? So law said that if any partner out of the way is helping the business, so you will treat to that two transaction, you will treat C as a third party, and you have to pay him the rent. You have to pay him the interest on loan. Had you taken loan not from C, had you taken loan from bank, had you told the bank that bank, I'm into loss, I'll not pay you the interest? Will bank accept? Not possible. Then why is it that loan is given by C and the firm is saying I'll not pay interest? Because I have a loss. So this is not acceptable. Law said that nothing doing in case of loan given by the partner, in case of premises given as rent by the partner to the firm. When firm has to pay the interest and the rent, it has to pay irrespective of whether they're into profit and loss. Am I clear? So therefore, these two items are targeted as charge against profit. Charge against profit means what, Tanvi? What is charge against profit? Charge against profit means you will record an item as expenditure irrespective of whether the business is into profit or into loss. This is called as charge against profit. So what is appropriation of profit? Appropriation means distribution. Appropriation means distribution. So trading and P&L items are charge against profit. And from that, whatever net profit you get, you transfer it to the P&L appropriation account. And from here, you distribute this income to the partners in different ways. So let's suppose 6 lakh is net profit. 23,000 is interest on drawing. So the total final profit that is available is 623. So this 623 will be distributed to partners in various forms as agreed in the partnership deal, in form of interest on capital, in form of salary, commission, and finally profit. So now the 6,23,000 is getting distributed in multiple ways. So this is called as distribution of profit. This is called as distribution of profit. Another name for distribution of profit is nothing but appropriation of profit. That is why it is called as P&L appropriation account. Appropriation means what? Distribution. Appropriation means what? Distribution. And you will distribute only to extend what you have as money in your pocket. So now I'll discuss all these items one by one. Guys, first one is loan by partner. Loan by partner. Quickly tell me. Loan by partner. Who is giving loan to whom? So partner is giving loan to firm. So upon giving the loan by partner to firm, or firm and receives the loan, what is the journal entry for loan? Tell me. Sir, partner is giving the loan to the firm. Firm is receiving it. And we are following the accounting entity concept. So accounting from the business point of view. So firm is receiving loan. So bank account debit to loan by partner. Let's say 2 lakh, 2 lakh. The loan is taken on 1st of April itself. And the rate of interest agreed is 10%. So the firm has used the entire year, this 2 lakh rupees. So at the end of the year, 31st March, you're supposed to pass an entry for interest due. So what is the interest entry? Sir, who has to pay interest to whom? Sir, firm has to pay interest on loan to the partner. So for firm, it is expenditure. So rule is debit all expense and losses. So interest on loan account debit being expense, Credit will be, now you're studying 11th standard. Outstanding interest means what? Interest to outstanding interest. Salary due but not paid means what? Salary to outstanding salary. So here, if you write outstanding interest on loan, nothing wrong. But in the entire syllabus, whether you're a 12th standard student or a CA foundation student, they've agreed that instead of transferring this in outstanding interest on loan ledger, we will transfer in the loan by partner ledger itself. In practical life, if you want to create a separate ledger called as outstanding interest on loan, you have no objection. But academic wise, what they've told, no, everybody follow uniformity. Instead of crediting in the outstanding interest on loan ledger, please credit in the loan by partner ledger itself. Part why? Because if you record the loan amount in the loan ledger and the interest due in the separate ledger, so every time I see the balance sheet, I have to refer to ledger. Every time I have to pay the money to the partner, I have to see in the loan ledger what is the principal pending. In the interest ledger, Naman, what is the interest pending? So two ledgers will be headache for me. So that is why, for simplicity's sake, what they said, all the money liability, that is principal as well as interest both put together, record in one common ledger called as loan by partner ledger itself. So loan by partner. What is my interest? So 20,000, 20,000, because at the rate of 10%, 2 lakh at 10% is 20,000 rupees. Now, if I open LBP ledger, so it will be by bank 2 lakh rupees and by interest 20,000. So closing balance is how much? 2 lakh 20,000. So if I look at the closing balance or opening balance, I'll get to know what is the total amount that I'm due to pay to the partner. So in one single ledger, I'm getting the complete visibility. If I come and visit this ledger, I'll understand, oh, so this 2 lakh is towards the loan that I've taken. Oh, this 20,000 is towards the interest that I'm yet to pay. So this understanding can draw from one single ledger. That is why in your syllabus, they have passed this entry. From here, there is two possibility or two things you have to do. One, at the end of the year, guys, all the nominal accounts has to be closed by passing a closing entry. So, Parth, can you tell me the closing entry for interest on loan? Closing entry. Closing entry. What is closing entry? All the nominal accounts needs to be closed and transferred to trading account or P&L account or the P&L appropriation account by passing a closing entry. Interest on loan is currently in debit. To close, I have to put them in credit. So, to interest on loan. So, from debit, if you're removing interest and giving a credit, so in place of that, something else should be debited. No. So, what will you debit? P&L account debit, not P&L appropriation, because interest on loan by partner is a charge against profit, not an item of appropriation. So, P&L to interest on loan. This is my closing entry. Sir, next year if the payment happens, what is the payment entry? We'll reverse the liability. Loan by partner account debit to bank. This is the repayment entry. Any problem here? Online people, any problem here?
No, sir.
Are you able to follow what I'm trying to discuss with all of you?
Yes, sir.
How many of you are sleepy? Raise your hands. Parth, Mridula. Okay. So what are you supposed to do? Participate. If you don't open your mouth and answer, you'll feel sleepy. Okay? Now, on allowing interest on loan by partner. So, due entry. Upon the payment of interest, payment entry. And finally, the interest has been closed. So, closing entry. This is given in your textbook. I am not doing on my own. Here also, this PDF I have shared with you. For interest on loan by partner, I have recorded the journal entry here. What is the interest entry? And the interest you're transferring to P&L account, not appropriation account. So I put appropriation and put a cut mark so that you remember. So interest on loan by partner is transferred to P&L account and not to appropriation account. Now, please mark illustration 3 as important. Why? Because they've given you 3 scenarios. When the profit is 25,000, 15,000 and loss 25,000. In such a case, if there is a loan by partner, what would be the calculations and implications they've given? So I want all of you to quickly, I'll give you 2 minutes of time to go through this immediately. Akhil and Bharat are sharing profit and loss in the ratio 2:3. Akhil contributed 2 lakh, Bharat contributed 1 lakh. Kana? First floor. Second floor. On 1st October, Akhil and Bharat gave loans of 4 lakh, 2 lakh respectively. So can you please tell me what is the interest on Akhil's loan and Bharat's loan? Sir, percentage is not agreed. In the absence of agreement, interest on loan by partner is 6%. And the loan is taken only on 1st October. So people make a mistake. They do 4 lakh into 6%. Boss, date is very important. So 4 lakh into 3% means 8,000. And 2 lakh into 3% is 6,000. Am I right? 4 lakh into 6% into 6 by 12. 4 lakh into 6%. That is 6 by 100. Into 6 by 12. Coming. So 6 by 100 into 6 by 12 is nothing but 3%. So 4 3s are 12, not 8. 4 3s are 12,000. Correct? And for remaining is 6,000. Correct? So total is 18,000 people. Now, profit before deducting interest is 25,000 rupees. So P&L account. What is the profit? Profit 25,000 given in question. What is your interest on loan? 18,000. So what is the journal entry, guys? What is my closing entry? So P&L account debit 2 interest on loan. So in P&L account 2 interest on loan for A and B. How much? 12,000, 6,000. So can I say net profit is 7,000 is net profit. Any problem in understanding this? This is your case A, people. Online people, any problem in case A or case 1, sorry.
No.
Sir, no problem. Sir, what is case 2? Sir, in case 2, my profit is 15,000 rupees. This is P&L account. The profit is 15,000 rupees. But the interest is 18,000. So can I record only 15,000 and leave it? Sir, interest on loan by partner is a charge against profit. You have to record the entire interest irrespective of whether the business is into profit or loss, or whether the profit is getting converted into loss. Upon recording it, you should not be bothered. So here, 2 interest on loan, A, B, 12,000, 6,000. Full amount you will record. You will not bother about the profit. 15,000 profit, 18,000 expenditure. So you'll have a net loss of 3,000. Please participate, online people, or else you'll feel sleep. Case 2. Sir, third case, P&L account. Loss is 25,000. Where am I supposed to record the loss? Debit side. So loss is 25,000. Sir, what do I do with interest on gap? Leave it. No. Business isn't loss. Why to chumma complicate and increase the loss? Leave it. Let's leave it. Donkey fellow, this is charge against profit. You have to record it irrespective of whether the business is into profit or into loss. So 2 interest on capital 18,000. Mridula, you're not sleepy, you're lying to me. If you were asleep, you wouldn't have corrected, no. Total loss 43,000. Any problem, any difficulty with illustration 3?
No, sir. No, sir.
Illustration 4, manageable. Illustration 5, they have done one twist. So basically, they have taken a loan from September till year end. But what they did is, from September to February, whatever the interest came, the interest is paid. But from Feb to March, 1 month interest is outstanding. So what I was expecting here is that they'll pass the interest due entry for the entire 6-7 months. That is September till Feb, they'll pass the due entry. And then 1 more entry for payment. But surprisingly, what they've done, whatever the 6 months payment is done now, instead of passing the entry, interest on loan to loan by partner, 12,000, 12,000, and thereafter, loan by partner to bank, 12,000, 12,000. Instead of passing 2 separate entries, they have combined together. So this account is knocked off. So they recorded entry interest on loan to bank. So here what are we trying to understand is that if any interest on loan by partner is paid in between the year itself, then you need not write the due entry. Directly the expense can be booked in the payment entry itself. This is only on interest on loan by partner and loan to partner. Or more specifically, as of now, loan by partner only. Because for the other transaction, the deal is different. For the other transaction, deal is different. Please hold. So here, guys, September, October, November, December, Jan, Feb, for 6 months, the interest they have calculated 12,000. Paid. Question says paid. So directly the expense is booked in the payment entry. Whereas the entry what we learned here, or which was given in the textbook concept, what they said, the expense will be booked along with the liability, expense to liability, then payment entry. But here, surprisingly, what they did, they booked the expense directly along with the payment itself, which means what? The due entry, Manisha, and the payment entry were combined together. See, I don't understand the whole point of you guys coming here. When you want to daydream, you want to see here, there, sleep at home comfortably, bed is there, no sleep off, no there itself. Why in class? You will not get this opportunity again to revise. I'm telling you. You're not understanding this point. You don't have enough time, people. There are a lot of things to study. This is not only one accounts, no. There's so many other subjects. So this time what you're spending, if you don't effectively, efficiently utilize, you are the loser. Nobody is the loser. Please understand this point. Now, March 31, guys, the last month interest for 2,000 rupees not paid. So what they did, they passed a due entry, interest on loan to loan by partner, loan by Vijay account. Okay. So now, total how much money is there in interest account? 12,000 on March 1 and 2,000 on March 31. Both put together interest is how much? 14,000 is being closed by passing a closing entry in the P&L account. P&L to closing it together. Because in the interest on loan by partner account, total amount is how much? 14,000 rupees. So the entire amount has to be closed now. If I open the ledger, interest on loan, this is a nominal account. What is the first posting? So to bank 12,000. Then second posting is to loan by Vijay 2,000. So what is the total of the interest account? 14,000. So the entire 14,000 is transferred to the P&L account and the ledger is closed. The ledger is closed. Now tell me if you have any difficulty.
Sir,
Yes, boss.
so this 2,000, it wasn't paid till the end of the year.
Correct.
That's
So
why
with
we
the
don't
due
get
entry,
the
we have stopped. So this next year, whenever it is being paid, you will pass the payment entry.
entry. So that will be
Loan by Vijay to bank.
cash. Bank, okay. Yes.
Yeah. Next, interest on loan by firm to the partner. I'll just discuss two more things and I'll stop. So P&L account, we'll stop with that today. Next class when we come, we'll discuss about the P&L appropriation account. So interest on loan by firm to the partner. Guys, loan by firm is giving loan to the partner. So who has to pay interest to whom? Partner has to pay interest. So for firm, it is income. So what is my income entry, due entry? Sir, interest is income. Debit all expense and losses, credit all income and gain. So to interest on loan. What will you debit, people? If you write loan to partner and debit, it will be wrong. Here the law says that, the rule says that anything that we have to receive from the partner, it will be routed through the capital or current account. So it will be partner's capital or partner's current account debit. This is an exception. Or rather, I would say that every transaction that you record from now, that is interest on, loan by firm to partner, interest on capital, interest on drawing, salary, remuneration, commission, everything is being dealt with through the partner's capital or current account. Only exception is loan by partner and rent by partner, which means in the P&L account, these two items that you're recording, no, this will be directly routed in the respective liability account instead of partner's capital or current account. Whereas interest on loan to partner and all the other items of P&L appropriation account, when you pass the due entry, it has to be routed through the partner's capital and current account. Are you able to follow? So now here, Firm is given the loan. The firm is given the loan to the partner. So partner has to give the interest. So until partners give me the interest, I will debit the partner's capital or current account. I'll catch hold of the partner's capital and current account. Debiting partner's capital account means what? In the regular class, I've told n number of times. Debiting the partner's capital account means catching hold of his kudmi. Means what? Catching hold of his capital account. We tell nonsense fellow, until you pay me the money, I will deduct this money from your capital account and keep it. Capital account is a credit balance. To increase the capital, credit. To decrease the capital, debit. So debiting partner's capital and current account means you're catching hold of his capital account. You're freezing his capital account. Freezing of capital account means what? That partner cannot take that money from the business. So to the extent of interest, you're freezing his capital account. So partner's capital or current account debit to interest on loan. Second, interest on loan is a nominal account. It is currently in credit. All the nominal accounts at the end of the year needs to be closed by passing a closing entry. So interest on loan is currently in credit. To close, I have to give a debit. So interest on loan account debit to where? Interest on loan to, it will go to P&L account only. So in the P&L account, by interest will come. By interest on loan to partner. Loan is given to the partner by whom? By the firm. So this is the income for the firm. Any problem here? Third entry is the receipt entry. If firm is receiving money from the partner, what entry? Bank account debit to partner's capital or partner's current account. This is very, very important. These three entries you have to remember. Any problem in this, please tell me. Online people, any problem in this?
No, sir.
Take a highlighter, highlight this point. If partnership does not provide for charging on interest on loan given by the firm to partner, that is partnership deed is not there, or partnership deed is there, but they forgotten to mention about the interest percentage. In that case, interest is not charged on loan given by the firm to the partner. Please highlight it. This is the point that I gave, the 7th point. Interest on loan by the firm. If nothing is agreed, it is 0%. 0%. Sir, can you tell the third entry? Vijay, third entry is the receipt entry. Kana. First entry is what? You record the due entry. Guys, first entry is the due entry. This is the total amount due to be received from the partner. So until he gives me the money, I have freezed this capital account. Now in the third entry, I'm receiving the money from the partner. So money is receiving, firm is receiving money. So bank account debit, debit what comes in, bank is coming in. And the moment he takes the money, who's that in between talking? Udira, please silent it. Kana. Now once we receive money from the partner, should we not unfreeze his capital account? The capital account which you debited earlier, to cancel the debit, am I not supposed to give the credit? So you are reversing the freezeness. Whatever freeze account you're freezing, you're reversing that freezed account. Vijay, are you clear with that point now?
Yes, sir. Got it, sir.
Sir,
Yes, boss.
sir, as a firm, when we give the loan to the partner, I forgot, do we create a loan account or does it go in the capital account
It'll
itself?
go, no, it's loan when it is given, it'll go to loan account. Good question. Firm gave 2 lakh rupees of loan to the partner. So when the firm gives the loan, what is the entry? So money is going out. So to bank, 2 lakh. And it will not be partner's capital account. It will be in the separate asset account. So it is loans and advance to, let's say, A. 2 lakh rupees. So this will remain in the separate account only. If you remember in the dissolution, you had this separately visible in the balance sheet. So for this, it will be the loan account only. But the interest on this will be debited and credited in the partner's capital account. So what is my interest? Let's say 10%. So what is my interest entry? So A's capital or current account debit to interest on loan. 20,000, 20,000. Now this interest on loan is a income to be transferred to P&L. So it will be interest on loan to P&L, 20,000, 20,000. And fourth entry, let's suppose later this person is giving us the money. Then the entry will be bank account debit to A's capital or current account, 20,000, 20,000. Now tell me if you have any doubts in this. Comfortable, online people?
Yes, sir.
Others, everybody. Hello.
Yes, sir.
Yes, sir.
Yes, sir.
Fantastic. Last segment, people. See, sixth question is wonderful. Here also they've given the point. In the absence of agreement, interest on loan to partner, that is loan by the firm to the partner, not charged. But this information is scattered here now. So what did I make you do? In the tabular column itself, I gave you 7th point and made you write there itself, so that you don't have to remember separately. Rent paid or payable by the partners. So here what they've told, if rent is paid during the year, entry is very simple. Rent to cash in bank. If it is paid, I don't want to create the payable account. Don't create or don't complicate it. If rent is paid, then and there, rent to cash. If any month's rent is not paid, then only it will be rent to rent payable. So rent paid is here, rent payable is here. So both put together, I need to transfer to P&L account. So P&L account to the total rent of point number 1 plus 2. Yes, boss. Not at all. Not at all. This will not be taken. That's why I told you that interest on loan by partner and rent is an exception where the partner's capital account and current account will not pop up. Whereas for everything else that is happening between the firm and the partner, which has got the flavor of nominal, it has to be routed through your capital and current account. So next class when I start, I'll definitely touch upon this again and start. Only this point, these 3 points, so that you get a clarity. Now listen to me very carefully. Illustration 8, please try it once by yourself. And then Managers Commission, P&L appropriation, or next class. That is tomorrow when we're meeting, no, that time I'll discuss. One important point. Whatever we have done today, or whatever plan we are going to do, for example, this class is over now. By tonight or tomorrow morning, whatever we discussed, you have to recap the entire thing thoroughly in such a way that whether you get a chance for revision or not in between, or whether you directly study this in the 4th day of examination, you should be able to recollect it. So keeping that in mind, you have to do the effective revision now. So this revision, immediately what we did now, immediately within 12 to 24 hours, if you do it, only then this revision will turn out to be effective for you. May come what your situation may be. You might have exam tomorrow. You might have a project submission tomorrow. So keep all that aside. This technique will help you to score the target, what we have kept it. Point number 1. Second is, when you come for the next class, you know what I'll be taking. Managers Commission, P&L appropriation, till interest on capital I'll take. Spend 15, 20, half an hour, 15 minutes, 20 minutes, half an hour, maximum half an hour. Whatever we are going to do, before that, if you can glance it once, just at the top level, so that you know what are we going to discuss. Then you come and sit in my class, the revision will be very, very effective. I'm telling you, very effective. Then within 12 to 24 hours of tomorrow, you do a revision, proper revision. You go through each and every question, work out 1 or 2 questions. Line by line, you go through everything. The concept that will go and stay, no, he'll stay for a very long time. It's my guarantee. And today I've done my revision. Within 12 to 24 hours, first revision I've done. From there, you can take a gap of 5 days or 7 days. You can do a second revision. Only on those points which you feel is very difficult for me to remember. Please understand, the end of the day, what matters is what is there here. In the examination hall, the answer will come from a subconscious mind to conscious mind. So everything has to be registered here. So until you get the information here, keep on recollecting. Try to test yourself. You don't wait for the school test or the academy test. You test yourself at this particular point. Are you able to recollect without the help of book? For example, let's say 3 days later, randomly night you're sleeping. Just recollect. What is the interest on loan by partner entry? Tuck, 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 tuck. If you're able to recollect it, which means you have studied well. And at that point of time, if you're able to recollect well, it's my guaranteed assurance that during the exam, you will be able to recollect. But after 3 days, 5 days, or 7 days, if you're not able to recollect the point when you're sleeping or taking rest or randomly, which means it has not gone well into your mind. So that calls for a intermittent revision. This is so psychological. I've said you guys, this is something you cannot bypass. This is common sense. If you're not able to do it by yourself, you're not able to think of it by yourself, it's okay. After saying, or despite me saying this, if you're not able to follow, if you're not following it, then you are the loser. This revision technique has never let me down. And there's so many other points I'll value add as when we go forward. But This is like bare minimum. You have to do it. So please go home. I know it is a holiday season. You have your moods of going out. Do it. I'm not saying no, but come back and prepare. Guys, I'm telling you at my level, whenever I go out, I step out. That day's target, if I'm not able to achieve, I go out, come back home, 11:30, 12 o'clock. I sit and do what I'm supposed to do. So I don't compromise on my enjoyment, nor I compromise on my target. Yesterday night, I slept at 1 o'clock because I had a target for today's class. I have to prepare. No, for revision. I went out, came back, and I did the revision. That is my commitment for you. Then imagine the commitment what you should have for your own self. I'm not saying don't go out. Enjoy the holidays. Life is all about balancing your personal life as well as a professional life, whether it is study or work. Balance it. You cannot compromise on either of the thing. For studies, don't compromise the enjoyment. For enjoyment, don't compromise the study. Have a perfect balance. Strike the balance, you'll be the leader. The person who's not being able to manage, no, he's the person who's struggling till the end of his life. So you decide whether you want to become a follower or you want to become a leader. It's up to you. Am I loud and clear? So on that positive note, let's end today's session, guys. That's all from my side for today's session. I'll see you all in the next class, which is tomorrow, 6:30 p.m. sharp. Until then, bye-bye. See you. Take care.
Thank you, sir.
Thank you, sir.
Thank you.
Thank you, sir.